Assalamualaikum and hi, my name is Wan Atira binti Wan Muhammad Shukri. Number matric is 195833. So today my team and I will discuss about the revenue and the account receivable cycle process. So here is the content that we discuss in the topic. What is revenue cycle and account receivable process? So revenue process is a presented beginning with an order from a customer proceeding to exchange of goods and or service for a promise to pay and ending with the receipt of cash. While account receivable process includes setting up procedure for extending credit, generating invoice, maintaining records of payment due and payment received, and performing accounting function. The process in the revenue cycle is divided into 7 process, which is order entry, credit authorization, shipping, billing, cash receipt, account receivable, and general ledger. This process will be discussed deeply in the next slide. So the first step is for the company to record the revenue is order entry. It is accepted of customer order for goods and service into the system in accordance with the management criteria. It is the action needed to record a customer order into a company order handling system. In the revenue process in Medisihat company, order entry function is the entry of the new sale order into the new system. In the company, a purchase order from incoming customer is received by a clerk in the order department who prepare the pre-number company sale order form on which the relevant information is inserted. So the sources document is related to the process is customer sale order, which is contain detail of the type and quantity of the product and service ordered by the customer. Next is credit authorization. Credit authorization is a appropriate approval of customer order for the credit worthiness. It must determine that the customer is able to pay for the goods and service. The role of the credit authorization will decide how the consumer will able to pay for the product or service. So in the Medisihat company, the sale order form is then passed to the credit department for credit approval. Customer have a present credit limit in the company, and the sources document is related is credit approval form, which is a formal procedure for investigating the creditworthiness of the customer. So number 3 is shipping. Shipping is a good that have been authorized. It must ensure that the customer order are filled with the correct product and quantities. So the shipping department in Medisihat company are copying of the invoice and the bill of landing are then sent to the shipping department. After the order has been shipped, copies of bill of landing and returned to the billing department. The shipping department copy of the invoice is filled in the shipping department. So the sources document related is shipping document, which is contain information on the type of product shipped, the quantity shipped, and other relevant information. Next, the sale order form is passed to the billing department. Billing is ensured of sale invoice to customer for goods shipped or service provided. Also processing the billing adjustment for allowance, discount and return. It is ensured that all goods shipped and all service provided are billed at authorized price and term. So in the MediSehat company, the clerk use the computer to generate the customer invoice, and it's automatically multiple the number of items times the unit price and adds the extent amount for the total amount of the invoice. The billing clerk determine the unit price for the item from a list of the billing price. All shipping documents should be accounted for in other system and matched with the related sale invoice. The related source document in the billing is sale invoice, which is contain information on the type of product or service, the quantity, the price and the term of trade. And sale journal. And the fifth step is cash receipt. It is processing of the receipt of cash from customer. It must ensure that all cash collection are properly identified and promptly deposit into the bank. The sources document related to the cash receipt is cash receipt journal. It is used to record the entity cash receipt. The next step is account receivable. It is recording all the sale invoice, collection and credit memoranda in individual customer. It is ensure that all billing adjustment and cash receipt are provided or properly recorded in the customer and account receivable. So the document related to the account receivable is account receivable subsidiary ledger, which is contain an account and detailed transaction. Finally, we move to the general ledger. General ledger is a proper accumulation, classification and summarization of revenue, collection and receivable in financial statement account. Make sure it record correctly. Periodically, an internal auditor in MediSehat trace a sample of sale order all the way through the system to the journal and ledger, testing both the procedure and dollar amount. So the source document related to general ledger is general journal, which is a journal recording all the transaction of the business. Process in the account receivable and the source document involved. The first step is for the company to develop a credit application process. The company will then decide based on the creditworthiness of the applicants as to whether they will offer goods on credit. The company might choose to offer the credit to individual customer or other business. Also, the company will establish terms and conditions for credit sale. The document outlines the client's obligation and required. The witnesses are shipment in Warisan Sejarah Bahaya is made immediately whenever order are received. No screening of credit approval is made by Warisan Sejarah Bahaya before shipping. In this process, the source document involve credit approval form, which is a formal procedure for the investigating the creditworthiness of the customer. The second step is invoicing customer. An invoice is a document provided to the buyer detailing the product and service that have been rendered, the cost of those product and service, as well as the date payment is expected. Each invoice have to have a unique invoice number for easy retrieval. In situation of warisan secara berhad, a copy of the shipping document is filed with the sale invoice and the sale order, but there is no true review done on the document by supervisor. So, warisan secara berhad needs to fix its weakness. The source document are involved in this process is sale invoice that contain information on the type of product or service, the quantity, the price, and the term of trade. It also includes sales journal and customer statement. Next process is tracking account receivable. This step is performed by an account receivable officer. The officer key out of a payment deposit into the bank account of supplier, feed it into the account receivable system, and then allocate it into the invoice. The officer also reconcile the account receivable ledger to the certain that all the payment are account for the proper post, and then issue monthly statement to the client. The statement provide detail for the customer about the amount owed as per previously sent invoice. The weaknesses of warisan secara berhad for the account receivable general ledger account and the subsidiary ledger account are posted by the same person, and there is no independent periodic reconciliation between the control account and the subsidiary ledger account. So it will lead the material misstatement and must be avoid this problem. The source document are account receivable subsidiary ledger, which it is contain an account and detailed transaction. Lastly, it is accounting for account receivable. The collection officer establish the due dates for the payment. After identification of unpaid debt, the account department makes journal entry to record the sales. The process involves both accounting for the bad debt or the unpaid debt, as well as the identifying early payment discount.
Okay, next is the journal entries involved. As sale is the main revenue producing transaction in a business, there are three commonly journal entries that involve in the revenue cycle. First is sales journal. Sales journal is used to record credit sales, so it will involve account receivables and sales account. For example, this is the sales journals, which is we will debit account receivables and credit sales because credit sales will increase our account receivables value and also increase our sales value. Next is cash receipt journal. Cash receipt journal is used to record all receipts of cash. Cash receipt journal is used when there is a cash sales or when there is repayment from our account receivables. When there is a cash sales, we will debit cash and credit sales, while if there is repayment from our account receivables, we will debit cash and credit account receivables because we want to reduce the account receivables amount as they have paid us. The third journal involved in revenue cycle is sales return and allowances journal. Sales return and allowances journal is used to record sales return and sales allowances. Sales return occur when our customer return our sold good because of damage or because we send to them a wrong item, while sale allowances occur when our customer agree to accept our product with slightly damage with lower price than what we charge to them. So when there is a sales return or sales allowances, the account involved is sales return and allowances, and also account receivables. We will debit sales allowances and we will credit account receivables because it will reduce the amount of account receivables. Next is accounts involved in revenue cycle. Accounts involved in revenue cycle is determined based on the transactions involved in revenue cycle. The first transaction involved is sales. When sales transaction occur, it will involve sales account, cash accounts, and account receivable. Cash accounts is involved when it is a cash sales, while account receivable involved when it is credit sales. Second transaction is cash receipts. When there is a cash receipts, it will involve cash accounts, sales accounts, and account receivable. Sales account involved when the cash receipts is due to cash sales, while account receivable involved when the cash receipts is due to repayment from our account receivable. Third is sales return and allowances. When sales return and allowances transaction occur, it will involve sales return and allowances accounts and also account receivable. When our customer return our goods sold, it will affect the account receivables because the amount of account receivable will also reduce. Next is write-off of uncollectible accounts. Write-off of uncollectible accounts transactions will involve allowance for doubtful debt accounts and also account receivables. This is an important transactions in revenue cycle because it is an estimation of how much account receivable that we cannot collect, so it will affect our revenue. Finally is bad debt expense transactions. Bad debt expense transactions will involve bad debt expense accounts and also allowance for doubtful debt. Bad debt expense account is important in the revenue cycle because it will reduce our revenue, which we supposedly collect from our account receivables. So from the transactions involved in the revenue cycle, we can see that accounts receivables involved in many of the transactions in the revenue cycle. Next is the revenue cycle flowchart. As sales of product is the main revenue producing transactions, so the revenue process will start when the customer places an order. Customer can place an order through email, phone call, or business website. Then the order department will receive customer order and send to the credit department for credit approval. Credit department will normally use computer system to identify customer's account balance and credit limit to determine the ability of customer in purchasing. Credit approval is a good control because account receivable who cannot afford to pay back their payable will increase allowance for bad debt. Then order department will prepare sales order for the approved customer and done it in a few copies for the use of shipping department, for the use of billing department, and for the customer, and also to keep in the department file. Next, shipping department will prepare the bill of lading to signal that product have been shipped and billing department can bill the customer. Shipping department will prepare few copies of bill of lading such as in the flowchart BL1, BL2, BL3 and BL4 for the use of billing department, for the use of carrier, for the customer, and to keep in their department file together with the sales order. Then after the billing department receive bill of lading from the shipping department, billing department will bill the customer through key sales transaction. In the key sales transaction, the billing department will match the documents such as the sales order, the customer order, and the billing department also will check the arithmetic, pricing, and also discount involved in the sales transactions. Then the data will be updated in the sales transaction file and come out with report that used to record sales journal and also sales invoice. Billing department will prepare a few copies of invoice for the customer purposes and also to keep in the department file together with the customer order, sales order, and bill of lading for evidence. Based on sales transaction that have been recorded in the sales transaction file, billing department will update account receivable master file. Account receivable master file is the file that contains all account receivable file. Next, in the cash receipt department, when the cash receipt department receives checks or remittance advice from customer, notify of payment, cash receipt department will update in the cash receipt transaction file. If the cash receipt department only receives checks from the customer, cash receipt department also need to prepare the remittance advice as the evidence because it includes more complete information including invoice number, amount of sale, amount that have been paid, and discount, and etc. Then after the cash receipt department update the cash receipt transaction file, they will record cash journal. Billing department will use the data from the cash receipt transaction file to update the account receivable master file if any of account receivable have made their payment. So based on the account receivable data, billing department will come up with account receivables agent report and write off uncollectible amount.
Assalamualaikum warahmatullahi wabarakatuh. My name is Badrul Zaman bin Jamaluddin. My matric number is 196663. So next, I will present about internal control involved in the revenue process. So first is control environment. So what is control environment? Control environment is a process where the board of director and senior management establish the tone at the top regarding the importance of internal control. So, control environments reflect the attitude, awareness, and action of the top management regarding control. A well-controlled entity establish um, establish adherence to ethical and behavioral standards that communicate with the employee. So, for example, management need to remove any incentive or opportunity that might lead to fraudulent and unethical behavior. Control environment also include assignments of authority and responsibility for operating activities. Next is monitoring of control. So, monitoring of control actually means that the manager will monitor the performance of the entity over the time, as it will provide reasonable assurance to the entity achievement. Management need to make sure that the entity are operating efficiently and effectively. For example, um, the management can assess the design and the operation of controls in the revenue process. It also involves understanding how the personnel performs the control, as well as the effectiveness of control. Next, the management also can make a comparison on the performance for the operational department to detect any difference and take any action uh, that can be used to overcome the issue. It will show that how effective the control to manage any risk or difference that occurs in the financial statement. Next, I will explain about internal control that involve in receivable. So first is segregations of duty. So what is segregation of duty? Segregation of duty is one of the proper internal control procedure that involve more than one person to complete a task. Um, why internal control did this internal control procedure? Because it is to ensure that there is no there is no opportunity for the employee to engage with the fraudulent activity. For example, the person for example, for the segregation of duty, the person who made the sales and recorded the sales is different. uh, it is because the amount that's transferred from a person to a person will remains the same as the first person cannot change the amounts. um, Other than that, the receivable only will recorded when there is sufficient document to ensure that the transaction is exists. Um, Documents such as purchase order, shipping document, and sales invoice is the document that is needed to ensure the existence of the transactions. Other than that, internal control can also be documents as such as customer purchase order, shipping document, and sales invoice using pre-numbered or numerical sequence. It is used to prevent and detect any misstatement that may happen in the transactions. So actually, pre-number can also ensure the completeness as well as the occurrence of the receivable transactions. So next is authorization. Authorization is assignments of manager that are responsible on any transactions that needs authorizations. So authorization uh, is needed for large payments, unusual payments, and unnecessary expenses. So to prevent these transactions, uh, to occurs without the authority of manager, they need the manager need to play the role to make sure that all the transaction get his authority. So for example, every goods that are shipped need to have authorized shipping documents. It is to make sure that the shipping department does not ship the goods to the third party without billings. More than that, the manager need to authorize the price list properly, and only the manager can make the change to the price list. It can prevent any intent to increase the price more than the price that stated in the price list. Next, I will explain about risk area in revenue process. So, risk of material misstatement for revenue is a risk that occurs in revenue, but internal controls that related to the revenue cannot detect or prevent the misstatement. So there are two risks in the for the revenue process, which are inherent risk and control risk. So for inherent risk, it is a risk that occurs uh, before the considering the control procedure for it. Um, These risks occur when the revenue transaction are occurring and the level of risk is dependent on the nature of the revenue transactions. Example of it is revenue may be overstated or be recognized when it is not supposed to do. Revenue may be overstated uh, by management to meet certain targets or due to incentive or pressure. It will increase the inherent risk, which will result a higher level of risk of material misstatement. In this case, the auditor need to perform internal control procedure to lower the risk, so we can have an acceptable low level of audit risk. So next is control risk. So control risk for revenue. Control risk occurs when the internal control does not operate efficiently and may increase the risk for the material misstatement. For example, record revenue on the shipments that not happen or shipping that never happen, or shipping goods to customer without billing. This may happen because of no proper control for the revenue transaction, or the control procedure are not properly implemented by related personnel as they are intended. This means that the person already intend to not implement the proper procedure to the transactions. So suitable control actually can help in preventing this situation and minimize the risk of material misstatement that occur on the revenue transaction. Next, risk area in receivable. Risk of material misstatements is the combination of inherent risk and control risk, which inherent risk is a risk that occurs beyond the control of internal control, and control risk is a risk due to the failure of internal control. So for the inherent risk in receivable, actually inherent risk is related to the nature, size, and the complexity of the entity. The higher the complexity of the entity, so the higher the inherent risk. So the main inherent risk for account receivable is related to the existence associations of account receivable to misstatement. Um, for example, receivable transactions may not exist, or fake invoice is made. We can see that fake invoice are made to increase the sale of the entity, or receivables are recorded on the current year when they are actually made after the year ended. When inherent risk is high, the auditor probably will perform a test of control on account receivable. It is to obtain the evidence that about the effectiveness and the efficiency of the internal control on controlling the account receivable. So next is control risk. So control risk occurs due to the failure by the internal control. However, there will also um, they may also they may also happen by a fraudulent uh, activities, as maybe some of the worker that intend to do a fraud. So for example, goods that are not shipped is recorded as sales, or transaction is not recorded in appropriate years. So it means that the sales that is not shipped, but the employee record it as receivable, record it as a sales. So this level of control risk will affect the level of risk of misstatement in receivable account.
Okay guys, we will continue with the important assertions for the cycle. Okay, for the assertions, I will be covered for the revenue process and account receivable. Okay, for the revenue process, the the assertions, the most important assertion that I pick out is the occurrence, completeness, and authorization. Okay, after we read all the case studies, we can identify, or personally my group and I can identify the the revenue process is occurrence and completeness and authorization. Okay, for the occurrence, the auditors occurrence to ensure that all revenue recognition and cash transactions even that have been recorded occur to the totally occur to the company. Okay, for occurrence, okay, what is the occurrence? Mainly when you talk about is, okay, let's say the company have said, okay, the company have purchased the sales of 25,000. We have to know what are the particular things, what are the particular element to make their sales to reach until reach until 25,000. So we want to see the occurrence for the sales. We want to see the occurrence for the sales. However, for the next is completeness. Okay, completeness is the revenue or the cash receipt transaction through the through the entity. It should be recorded. Okay, the transaction. However, the example of the completeness is that shipping document that match with the sales invoices, and auditor will trace the shipping document to the company sales invoices. Okay, let's say we shipping document, the customer order, we do the shipping document, and we want to see whatever we do match with our invoices. And personally, the auditors will be traced. That's why the auditors always trace the documents, the shipping documents and the invoices. They trace, are the complete, they will see they are complete or not. What you state and what you do is a complete or not. If a complete means that is because the assertion is a complete. The assertion is very important to the auditors to make an evidence, and the third one is authorization. Authorization is a huge topic. It is we cover the transaction or the event appropriately. The amount is the amount is the amount is recognized. Okay, the exception can be clearly when the company said the sales need to be authorized. uh, let's say the sale limit authorized is only 10,000 for per day. So it should be authorized by company, authorized by entity. If the thing is not authorized, that means there is a that there is a no exception is occurred. So what is the thing is, for example, the what I gave is this exception can be clearly when the company do authorization for every sales, and they need to authorize when passing through the shipping document this during the credit approval. That's why we need authorization. We need the authorize. Okay, this person are not credit. The word authorize. We need someone with authorized that this particular client are not with the credit or debt thing. We want to avoid the credit worthiness. We want to avoid the credit worthiness because we have a credit approval form. So this is important authorization. Okay, however, I will also cover the exception for the account receivable. Okay, the exception to cover the account receivable is the important exceptions that I chose is existent and valuation and allocation. Existent, what as early stage I already state existent. It we want to see uh, actually what is existent, what is exist. So what the auditors will do to see the existence. So the auditors always use the external confirmation. They send to the third party. Let's say uh, I send to the third party. I'm as the auditor. Let's say the thinker that I'm as the auditor. I send to the this debtor to check. Okay, is it this person gave you the debt? This with this particular month. So we want to see this is exit or not. That's why we want to see that is the existence. But in this case, based on this scenario, Addison and Abraham make mistake where this trade made their shipment document even though the process not complete until it is revenue. So it's not existent. It's not existent. Tapi, but they already come out with a statement revenue declaration. So it's not existent in this case. However, we jump to the valuation and allocation. For valuation and allocation is the accounts where it is reflect the balance. Okay, this is the net realized value. Net realized value is basically about account receivable minus with allowance for bad debt. Why we want to know the net receivable? Because it is for easy for the entity to know what is the uncollectible amount supposed to they to collect. So then we will get accurate allowance for uncollectible amount. So they know what is the amount that should get the value and the allocation what is purposes they will get the huge view. So this in this topic we can see that the auditor will examine the comparison with the current years and previous years. That's why the auditors always check this year's and the previous years. This net level is very helpful for auditors to see. Yes, this in this case it's very important to this company to see the uncollected debt are received can avoid a possible misstatement or not. So for this case, for this entity it's very important. We want to see that the collectible uh, uncollectible allowance is received or not and can avoid the possible misstatement. So we can see that the value, the allocation. So we want to see the allocation and the valuation of the entity.
So the first question for revenue required flow chart the billing function as a means of understanding the system. So from the information provided, the billing function of Medicare Pharmaceutical Company starts from the source document received from order department, which is the sales order, as be labeled as sales order 3 SO3. So the order department will prepare pre-numbered sales order and pass to the credit department for credit approval. The order department will prepare a few copies of sales order, and one of it is for the billing department. Next, the billing department will use a computer to generate the customer's invoice through key sales transaction and update the data in the sales transaction file. It will automatically multiply the number of items times the unit price and adds the extended amounts for the total amount of the invoice. The billing department will prepare 4 copies of invoice, which is first for the customer's copy, second is for the sales department, third is to keep in the department file, and fourth is for the shipping department with the label number 2. Next, the billing department will mail the invoice together with bill of lading to customer. The bill of lading is received from the shipping department as notification of shipment have been done. The shipping department will prepare a few copies of bill of lading. 2 copies of bill of lading is for the billing department, which is one for mail to the customer and another one for the invoice file, which will be attached together with the invoice and sales order, which have been labeled as sales order 3 and also invoice 4. So those 3 documents will be filed in the invoice file for the future reference. Next is the sales transaction file, electronic file. The electronic file will update daily sales report and also the weekly or monthly report, including journal and ledger. So from the flowchart, we can identify a few journal and account that will involve in the cycle. First one is the sales journal that will record credit sales, and it will involve account receivable and sales account. When in the sales journal, we will debit account receivables and credit sales journal. The other journal that been involved in the cycle is sales return and allowances journal, which will involve sales return account, sales return and allowances account, and also account receivable, which we will debit sales allowances and credit account receivable, as we want to deduct the amount of account receivable when our customer return back our goods sold.
Next questions. List the internal control over sales for each of the 6 transactions related to audit objective. So first, recorded sales occurred. The internal control in this transaction is they attach the bill of lading and sales order form to invoice. Next, the sales order form is transferred to the credit department for approval on the credit transactions. Credit is approved by the department. So it shows that they try to get the authorization from the credit department about the credit sales. So next is existing sales transactions. Bill of lading and invoice are pre-numbered and prepared before merchandise is shipped. It means that it shows that internal control try to ensure that the existence of these transactions by using a pre-numbered procedure for all the documents to make sure that the document is there. Next is sales are accurately recorded. Control total are prepared and checked by computer. Internal control in these transactions, the total for the sales transactions, and they have prepared the totals for the sales transaction and check the amount with the documents by using a computer. This is easier the internal control to update the record for any new transactions, so it will reduce the risk for the material misstatement from happen.
Hi everyone, and yes, very good day to the Dr. Mazrina and my fellow friends. My name is Morganada son of Engana Selvan. My meeting number is 199236. Will be present the assignment for the auditing presentation, which is our group get a revenue cycle and account receivable. Okay, for my part, I will discuss for the revenue cycle. I will discuss the certain question. The question from there is a sub question from the case study of revenue cycle. So I will go through to the revenue cycle C. The question is for each control, list the useful test of control to verify the effectiveness of the control. Okay, as what my friends say before, for the section for the 3B list the internal control, if we already listed internal control, but based on this slide, we can see that there are um, a few transactions with the transaction with the internal control. So for the recorded sales sales occurred means okay, basically the auditors what should do for the effectiveness of the control is they should examine the sale invoices of billeting order form, or they should examine the sales order credit approval or review the client's approval. Why we need we need the examination for sale invoices, sales order. Okay, recorded occurred mean where is we trace we actually doing tracing, we actually do tracing from the journal entry. We look at from the general for the general ledger. We look at the thing and we refer to the source of document. So for the record sales of occurred, if okay, let's say the credit control approval. Okay, before we give them purchase of the before the buy purchase or they want purchase to us, we see the first the client is affordable or not to pay. That's why we say credit approval. The client can pay or not, the client got bankruptcy or not. That's what they occurred. Recorded sales occurred. And then we go to the existing sales transaction. Existing mean it is where the sales already occurred in our system. So for the effectiveness, what the test we use is we use a numeric sequence of billeting to check if we record or not. Okay, what are existing? Okay, for example, we want to see the sales existing or not. So what we do is we take the client's we take the stock observation, we take the client's sales with the numeric and the ledger, and then we check when the sales occurred, how much the sales occurred, and what's the amount for the sales occurred during the period. And then we go to the third one, sales accurately occurred. Sales accurately occurred means where I want to say here is the sales, let's say the company or the entity occurred the sales for 1000, so it must be 1000, not less than 1000 or not more than 1000. It should be 1000. Let's say the sales occur for the for certain items, so it's the value of the 1000 100 ringgit value. So we should show that the 1000 value is there, not more below the 1000 or above the 1000. That's why they said examine computer report to detect the error or dispersion. If the company, the entity overstate the sales, that's why it said we need the recorded accurately. We want the sales. Why we want to check the report? Because we want the sales, what weapon is stated as now. So that's what we want to check their report. And then however we move to the recorded sales properly classified and sales recorded in sales record correct date. For this transaction, we normally do not apply any test of control because we not it is proper classified and the date is correct. We just to make sure that the date and the classify is correct, but we do not apply any test of control, but the auditors should check everything. the auditors check everything, date everything, or the classification everything. This is because this is can be an extra evidence for the auditors to collect, actually to collect. So we want to see the date present for purchasing this year is correct, and the date for for the sales order. We record everything. So this one, for now application will be here to check how the date is correct or not, or the recorded as properly classified or not. And then we go to the last one. Sales transaction are correctly included and summarized. So what is, okay, sales transaction? Sales transaction can be anything. Can be a huge, very huge topic. So why, what the auditors do to find the effect of the test control? They want to see the sales, the transaction, you want the sales of the transaction. They want to see how they summarize the occurred of the transaction and how they summarize. So what we have to do is track the sales transaction to the original journal. Tracing. What I say, the tracing means the occurrence. Tracing means the occurrence. Sorry. Tracing means the occurrence. Yeah, we want to see the we do tracing. Tracing means we check, we track everything for general ledger to the sales, for the sales to the general ledger. For example, you can, maybe we can ask, maybe someone asks how you trace the sales of the entity from the sales journal. So this is what we do, auditors. uh, as what I know is they have to do stock observation. When they go to stock observation, they will get opportunity to check each file, and each file got the sequence numbers. They'll say the file number 25 in the journal entry. So in the source of the document is stated this is the value of amount, and then we check the journal ledger. Is the value is correctly ledgered with the source of document? It means is correctly included and summarized. The whole process of ledger to the source of document and document to the ledger. But this is a basic thing which is we call as inspection of document. But in deep, we say it will be tracing. So this is the overall of this question.
Study case question revenue for the for each transaction related to audit objective for sale, list appropriate subjective test of transaction audit procedure considering internal control. So auditor can concern about the completeness assertion to make sure that all revenue and the cash receipt transaction that have been recorded have been recorded. Possible misstatement that can be which goods shipped or service are performed but revenue is not recorded. So it can be done by trace selected shipping document to the sale journal to be sure that each one is included. Other than that, performing analytical tests to assess the account and the other relevant information are consistent. For example, to test the control that shipping documents are matched to the sale invoice, the auditor could select a sample of bill of lading and trace each one to its respective sale invoice and to the sale journal. If all bill of lading in the sample were matched to the sale invoice and included in the sale journal, the auditor would have evidence that all shipped are being billed. Other than that, it can be done with record sale for shipment actually made to existing and performed by the customer. Auditors are concerned about the occurrence assertion for the revenue transaction because clients are more likely to overstate sales than to understate them. The major control of preventing fictitious sale is proper segregation um, of duty between the shipping function and the order entry and the billing function. If these functions are not properly segregated, unauthorized shipment can be made to fictitious customer by the circumvention of the normal billing control activities. For example, the auditor can examine and select sample of sale from sale journal uh, to trace journal entry to supporting document and examine customer purchase order, sale order from the sale order form and bill of lading to make sure that the goods were ordered and shipped. This will minimize the recording of fictitious customer. Next, it must be recorded sale for the amount of goods shipped and correctly bill are recorded. Revenue transactions that are not processed accurately will result in misstatements that directly affect the amount reported in the financial statement. So that accuracy is a most important assertion in this situation. It should be controlled by trace entry in the sale journals to sale invoice to compare sale price to price list to make sure that the total sale are correctly billed. Other than that, control can be made by examine customer correspondence, indicate pricing dispute, trace detail on sale invoice to shipping document. Next, it must be recorded sale for the amount of goods shipped and correctly billed and recorded. Revenue transactions that are not processed accurately will result in misstatements that directly affect the amount reported in the financial statement. So that accuracy is an important assertion in this situation. It should be controlled by trace entries in sale journal to sale invoice to compare sale price to price list to make sure that the total sale are correctly billed. Other than that, control can be made by examining customer correspondence, indicating pricing dispute. Trace detail on sale invoice to shipping document, sale order and the customer order to make sure that the amount of goods shipped are correctly recorded. Finally, it must be recorded sale transaction are properly classified. The use of an account and proper codes for recording revenue transaction should provide adequate assurance about the classification assertion. Examine sale documents to determine the sale transaction are properly classified. Next, examine duplicate sale invoice for the proper account classification.
Next question is combine the audit procedure from part C and D into efficient audit program for sales. So, efficient audit program for sales. It starts with the auditor obtain the document that related to the sales transactions for the year, which are sales journals, sales invoice, general ledger for sales account. Next, the auditor does an inspection through all the transactions in the sales journals and treats the totals to the general ledger. In the general ledger, it is to make sure that the existence of the transaction is in the general ledger. Next, the auditor checks the customer's purchase order, sales order form, and bill of lading are available, and compare the information to the sales journals. It seems like before, which is the auditor try to confirm about the existence of the transactions. Next, the auditor will check the authorizations on the sales order form for the credit approval, and compare the sales price with the price list to make sure that it is the same as treated as stated in the price list. Next, assuming that sales transactions are properly recorded on the appropriate period year and the date of shipments to the sales journals. It is to ensure that all the transactions is recorded in appropriate period year. The last one is the auditor will prepare the schedule of the sales transactions, cost of sales, and gross margin percentage. So the auditor will need this information to compare the sales between months or years to determine any difference that occur. So that's it.
Okay, hi everyone. Okay, we go to the question number 2, which is account receivable is under revenue cycle. So I will be explaining, or I will be go through this case study for the first Roman. Okay, first Roman, the question is identify the major factors that affecting the audit risk variation of the central part. Basically, this entity is the entity about fishing industry. So the problem, the audit risk in this case is, I will be say is this particular case, particular client is having in error risk to the in error risk, which is they couldn't find the, it couldn't be a protector or detected by the internal control. Okay, what the what the factor that affecting the audit risk is the complexity and the continuous of revenue reconciliation. Okay, let's say I give a situation. Okay, Mira, I receive a sales order from Mira or anyone sales order. So what I do is I do the shipping immediately. I will do the shipping immediately when I receive order, but I don't do any credit approval. So the thing I should is I should check that my client. I should check my client as approval credit. He can pay or not, or even with debt or not. So I didn't do anything. What I do is the straight go to the shipping. I do everything for the shipping. So when I do, there will be a credit reconciliation straight. I will be assumed that there's already a existence of sales. So this is what people say is revenue reconciliation is issue. They don't do any observation, but straight go to certain step and say is the revenue reconciliation. That's the first. And second is human judgment and misstatement in business activity to show the low risk. Okay, basically this certain company will say, okay, I don't have any risk, my company is very good, and we are the best in the industry, or we are, or not, they will not say the best industry, but they will showing that they are good in this particular industry. So what is happened in this case is the document filed with the sales invoices and sales order not supervised, means the documents are not authorized. That's why they do not do approval of the client's credit approval. So they don't have any authorization. So the thing they want is they want to go high. They just do. They don't ask any authorization. They are no step. So no authorization incur in this step, in this particular matter. So their judgment, so their misstatement, they don't apply the thing in this particular thing. And misstatement detected in prior auditors, which means misstatement, that if you guys go through it, they will say misstatement occurred in particular audit time. And then they found in billing cashiership record receivable of the previous years, misstatement happens. Okay, misstatement, this is will misstatement will be happen if the if there is no existence of sales. But we we, we as they already include everything, so there was a misstatement. When lastly you have to check and you don't receive any revenue of the sales, but you have sales, the sales was there, you have the sales, but you don't have the revenue. This is what we call as revenue recognition. This we call is revenue recognition, and it will be a possible misstatement. We can see Winston's, but we cannot identify, but this is the reason why this is occurred. So this is the overall factor that can affect this effect for this particular this Warisan Sudra Berhad entity.
Okay, the second question required that for each of the internal control witness in Warisan Sudra Berhad, describe the audit procedures that must be performed to minimize the control risk. So based on the case, there are 3 internal control witness that have mentioned. The first one is shipment is made immediately whenever orders are received, but no screening of credit approval is made by Warisan before shipping. The second internal control witness is a copy of shipping document is filed with the sales invoice and sales order, but there is no thorough review done on the documents by the supervisor. And the third internal control witness is the account receivable general ledger and the account receivable general ledger and the subsidiary ledger accounts are posted by the same person, and there is no independent periodic reconciliation between the control account and subsidiary ledger accounts. Okay, so for the first internal control witness, which is no testing credit approval, testing credit approval helps to ensure that goods are shipped to customers who are likely to be able to pay. By this, the valuation assertion for the account receivables is being directly tested. Audit procedures that must be performed to minimize the control risk is inspection of records or documents. Inspection of records or documents means that we examine the internal or external records or documents. For example, we can inspect the account receivable entry report that we can use as a tool for estimating potential bad debts, which then we use to revise for the allowance for doubtful accounts. So by this, we will minimize the control risk of Warisan Sudra Berhad who don't have the credit approval department. The second internal control witness in Warisan Sudra Berhad is sales documents not be reviewed by supervisor. Occurrence assertions of sales will be supported by thorough review done on the documents by supervisor. Occurrence assertions means that the transactions and events that have been recorded have occurred and pertain to the entity. So, audit procedures that must be performed to minimize the control risk is to obtain external confirmation. External confirmation can be defined as obtaining audit evidence from third party, which is licensed Berhad customer. The return confirmation provided by the customer will verify the sales transaction. So this will minimize the control risk of licensed Berhad, whom the supervisor do not done thorough review of the document. The third internal control weakness in licensed Berhad is no general ledger reconciliation. General ledger reconciliation is an internal control procedure that helps to ensure account balances in the general ledger are materially correct. Periodic reconciliation between the control account and subsidiary ledger account will support the assertion of existence of account receivables in which the account receivables record in the financial statement exist and not a fictitious figure. So audit procedures that must be performed to minimize the control risk is inspection of records and documents by tracing the receivable report to the general ledger. The auditors will ask for a period and account receivable ledger report from which they trace the trend total to the amount in the receivable account in the general ledger. If these totals do not match, there will be some records in the general ledger account that should not be there, which means that there is a fictitious figure of account receivable.
Study case question, account receivable for number 3. Since the response rate for external confirmation of account receivable balance is extremely low, the alternative procedure that can be suggested by the auditor is examination of subsequent cash receipt to determine the existence and valuation of the account receivable. Examination of subsequent cash receipt involve checking the account receivable subsidiary ledger for the payment of the specific sale invoice included in the customer account receivable balance that were outstanding at the date of the confirmation. If the auditor have obtained proof that the control of the company are good for recording cash receipt and the amount collected is a substantial portion of the receivable balance of account, the auditor may stop at this stage to assess the nature and the value of the receivable account. If the entity control is poor, the auditor can apply the testing to the cash receipt journal and to the bank statement by tracing the payment in the subsidiary ledger. Once the customer has paid the goods, the auditor has clear proof and evidence that the account receivable exists and is valued. Other than that, the auditor can examine the underlying documentation that support the revenue transaction if a customer has not paid the account receivable. This documentation includes the original customer order or shipping document. If this documentation indicates that the customer ordered the goods and the goods were shipped, then the auditor would have evidence supporting the validity of the account receivable. The auditor also may need to examine the correspondence between the entity and the customer to obtain adequate evidence of the validity and valuation of the account receivable. Finally, During the performance of confirmation procedure, the auditor should maintain control over the confirmation requests and responses. Maintaining control means establishing direct communication between the intent recipient and the auditor to minimize the possibility that the result will be biased because the interception and alteration of the confirmation requests or responses.